Hey, this is Matt from InvestiQuant. Today is Friday, June 25, 2021. Yesterday, the markets gapped up and went nowhere. We had a sizable up gap and then a very tight range, very summer-like trading. Yesterday only had 9.5 points of range in the S&P, and that's the quietest range we have seen in quite a while. So it put in that really tight range up at 52-week highs. We did take out the all-time highs in the S&P yesterday. So we got new highs and we got very tight range. That's what we're going to be testing this morning in Discover. So let me go ahead and set this up. We've got all four instruments selected here. The setup based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern time. The exit will be set to the close of regular trading hours, which is 4:15 p.m. Eastern time. Now, currently, we are trading higher in the overnight session, not sizably, but we are up a little bit. So I am going to add that because that is an important distinction for this pattern we'll be looking at. So I'm going to say that we are trading up, which means gap up here in the gap direction. That just means you're trading above the prior session closing price. So I've got that selected. If by chance we are to trade lower as we approach the open, you would want to go in here and look at this as a gap down because that will change the results on what we're about to see here. Next, I'm going to go in the price patterns section, and I'm going to take those two pieces of information I just shared with you about yesterday's session where we closed up at an all-time high at a 52-week high. That's what I'm actually going to be using here as we closed at a 52-week high, and I'm going to grab that from the active today's section. I'm just going to go under the new highs day after a 52-week high close. That comes from this new highs category here, and if I scroll down a little bit, you will see it there. The other piece of information that I'm going to be adding is yesterday was a narrow range session, and it was a narrow range 13-day actually, which means yesterday's 9.5 point range was the smallest of the past 13. I'm just going to use a narrow range 7 because I do want to keep a few more samples here. And since we're looking at it with a 52-week high close, I figured I'd go just a little bit looser with the definition. A narrow range 7 is still a very narrow range day relative to what you've seen, as that would mean that it was the smallest range of the past 7. So I've added that, and now I can click View Results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern time, exiting at the close 4:15 p.m. Eastern time, when you open higher than the prior day closing price, and the prior day was the most narrow range of the past 7 sessions and closed at a 52-week high. So historically, we've got 67 samples in the S&P, and that is dating back to 2003. We've got 60 samples in the NASDAQ, 55 in the Dow, 36 in the Russell. If we look at the win rates on these, you'll notice the S&P is quite weak. The others are a little bit more mild. So the S&P coming in, 36% of these have closed above the open. So that is quite weak. You can see the S&P equity curve here in blue just steadily working its way lower. The NASDAQ is at 55%, so that one is a little bit better than 50-50. And then you've got the Dow coming in at 45, the Russell at 44%. So as a group, they are a touch weak, with the S&P being the weakest of the group as far as win rates go. If we look at the average win and average loss on these, you'll see the S&P has a larger average loss compared to its average win to go along with that weak win rate. So that combination there historically has been bearish. For the NASDAQ, the average win a little bit larger than the average loss. They're very similar sizes, average win and average loss for the Dow. And then the Russell, the average win is a little bit larger than the average loss. So it's really just the S&P that's seeing quite a bit of weakness on this pattern historically. The others are a bit more mixed. But, you know, with this type of stats that go along with the S&P, it being so weak and an up gap, this is one of those days where you might want to be thinking about gap fade setups. That's something that you can test here within the Discover platform. So I know all of our users know how to do that quite easily. If you want me to just do this here real quick, let's run this back as a gap fade. So I'll set this up. Trade type, we'll change that to a fade. Since this is an up gap, that's going to mean that this is going to be a test that we'll be looking at getting short. So let me go ahead and throw stop and target on it. I'm going to put a target at prior day closing price. That's the 4:15 p.m. Eastern time price. And then we just throw a stop. You can pick what you want. I'll pick we'll do 40% stop here. And that's 40% of the 5-day ATR. Next, we'll go into the opening filters and just get rid of all of the gaps that may be super small. So you can do that however you want. You can do a gap fade by ATR percentage. You can do it by points, by dollars, however you want. I'm just going to put something in here that's simple. We'll just say that the gap has to be at least 1 point. So we're not trying to test gaps that are, 2 ticks or whatnot. So I've got that in here, and now I can click view results. All right, here we go. So these are the results of the exact same setup where the prior day was an NR7 that closed at a 52-week high, followed by a gap up of at least 1 point. The only difference here is we're looking at shorting the open with a target price or a target at the prior day closing price and a stop of 40% of the 5-day ATR. So historically, the win rates on this for the S&P are now up to 74%. We were looking at an end of day stop and target and getting long earlier, which is a 35% win rate, which is quite weak. So that's what kind of leads to the idea here of looking at a short setup. So you've got a 74% win rate there with an average win $200, average loss 224. So somewhat similar in size, decent win rate there. Equity curve looks quite strong. That has historically been a pretty favorable setup there for the S&P. If we look at the NASDAQ, it looks like a win rate mildly favored here. The average trade isn't very large here, just mildly favored for the NASDAQ, and that's kind of similar for the Dow and the Russell, mildly favored win rates on that setup. Coming in around 65%, average trades mild. You look at profit factors, another way of looking at profitability here. You can see S&P has a really strong profit factor. The bigger the number here, the better. Whereas the NASDAQ, the Dow, and the Russell, all around 1.2, which shows historical profitability, just not nearly as strong as what you're seeing there in the S&P. So that's just another idea if you are looking for a trade setup. Maybe an up gap in the S&P would be something you might want to consider fading for a test lower. You can use your own stop. You don't have to use 40% stop. You can kind of use your own discretion, but knowing that historically that's kind of been a favorable setup to consider. So hopefully you found that helpful. Good luck today, and we will see you next time.